gist of your questions, and then I'm going to answer them all. Okay. 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 Hi, guys. Please don't use nicknames because I don't know who's saying hi. So 123Q2 says hi, so hi to you, but I don't know who you are. So please, guys, just use your names. But hi to you, hello to you. And no. Um, on the okay, so let's okay. I'm going to answer some of the questions now. Now, first of all, what we try to do in trading, we approach the trade or approach trading with a specific philosophy, and that philosophy is knowing our limitations. And our limitations is that we cannot predict, and our limitations is that we approach it from a scientific and a mathematical and a statistical approach. We and that was going to be part of the but what we try to do, we try to minimize the odds of us losing on the thank you, Digby. On Digby just posted for you the so what we try to do, we try to take only the very high probability trades, and we try to identify points on the charts. We try to identify a price point on the chart where our decision is one of two decisions. I don't have too many decisions at, so let's say on the chart in front of you at 154.30, if the price is above this price point, my decision is to buy, or my decision is to do nothing. Below that point, my decision is to sell or to do nothing. Buying is no longer an option. Above this point, I can only buy or do nothing. Selling is no longer an option. Why? Yes, I can buy it, but it is a mediocre buy. It is a weak buy signal. It is not a signal that I can use to maximize my profits. Okay? Now, these points that we identify are, we call them the long point and the structural points, and we also have another point we call the significant point, and these are levels of importance, level of strength, and they are identified on the chart purely based on the price action and based upon the structure of the chart. The chart for us is the mathematical interpretation of human psychology. If Barbara, for example, decided that like Friday, she has decided that it is too risky for her to hold her positions over the week. So the way she expressed that feeling is by going into the market and buying back her shorts or selling her longs by closing her positions. That is her action. So if I knew Friday that Barbara was, let's say, short the pound Swiss, and then suddenly I see that the pound Swiss is going up, that tells me that is all the information I need to know that Barbara now has decided or has changed her mind about staying short the pound Swiss, and now she's acting upon her opinion or her emotion or her feeling by going into the market and buying it back. That is all the information I need to know how to make money, because if Barbara now wants to buy and she's desperate to buy, well, I will be the guy who is in the market that is going to fulfill her buying needs. And if she's more eager to buy, I will hold off. I will not give her what she needs quickly, because the longer I wait, the more she will be anxious to buy, and the more anxious she's willing to buy, the higher the price she's going to pay. And if she's going to pay a higher price, that is more money I am going to get. So these price points are our way to identify for us where traders like Barbara or the rest, I'm using Barbara because she said she was closing her positions before on Friday, where she is going to change her mind. So assuming we are discussing the pound Swiss on Friday, so let me go now. This is the pound Swiss. Let me show the pound dollar actually is better. The pound Aussie. So assuming that for example here, when they started selling the pound versus the Aussie, and that was when I see them coming below one, these are one level, the red lines is a level on the chart, another line is another level, these are all levels. When I see them coming below these levels, these are price points that indicate that they are now liquidating they are sellers looking for somebody to buy. So I am not going to buy from them, and I'm going to force them to make discounts. I'm going to hold my buying. I'm not going to jump in front of these guys and say I'm going to buy. And the more I see them go from one price level, this is the first discount level, and I see them going down to the second discount level, that is a sign that now they are desperate to go out. And the more desperate they are going to go out, the only way that they can convince me to buy is by making another sale, by discounting the price, by giving me a discount. They say, okay, I'm going to give you another 5% discount, just buy it from me. And the more I wait, the more discounts I get. Why? Because once they penetrate one of these price levels, that tells me now what is the psychology of the market, and I can expect, based on that psychology, how they are going to behave. Right there, that tells me that these guys now are desperate, and now they are going to be selling, and they are trying to, in order to convince the buyers to buy, they have to lower their prices, because that's the only way that they can convince me to buy or negotiate with me, is by the price. And therefore, by identifying this behavior, which is the price behavior, which is also Barbara's behavior, because the only way the price is going to move is an immediate reaction to the trader's behavior. So if Barbara wants to go out and she's desperate to go out and she has a stop and she's losing, she has to go market, and that's going to push the price down. And I keep on holding the price, and that's it. That's why when you see this capitulation, I'm not chasing to go out, I'm holding off and I'm staying until it gets to the second structural point, David. Now here, once it breaks below the structure, that tells me now that it's still going to go down. But if it bounces back off the structure, well, that tells me also that all the traders like me, the guys that have been trading this market and are able to identify these price points, have decided that this is a good price and they start to buy, and therefore we close the trade. So we identify there are minor buy signals, which are the basic shorting point, or minor buy signals, which is the buying point. And then we have a second, when the prices trade above that buy point, we only buy. If it breaks above a structural point, then we expect that move to be followed with big push, and therefore we hold back and we give them rein to run, we give them room to run. And that are the trades that we're looking for to capitalize on the move and take as much. So we have, as I said, several price points, and we identify them purely based on the chart and the chart action. Okay. Now the second question, well, there is no cookie cutter, David. I mean, the question is, do I close at the structure, or do I start buying, or just wait to see? Well, again, the short answer is the structure is a point where you look to make up your mind. So if it breaks and it penetrates the structure and it continues down, then by God, I'm not gonna buy it, I'm gonna sit with it. The structure point, or any point on the chart, guys, is a point where you and I, David, begin to think. That is where we have to think. Remember, and that's what kills me about those guys that tells you this is what you have to do, and this is what it is, and this is what is at. There is no 2 days that are alike in the market. I have been in this business close to 33 years. I have not seen one day that looks exactly like the other. People change. Opinions change. But so this price point, David, is where you and I and all the professionals look now to make a decision. If it breaks below it, then it should give me something like this. If it doesn't give me something like this and it comes back up, well, you want to take profits there, take profits. That's what I did, because it is now behaving in a different way. If it behaves in a different way, then I take my profits and get out. And that's exactly what I did over here. Okay? So, these are different zones. No, we don't use support and resistance, Jeff, and all that kind of stuff. We trade the market condition. The idea of buying support and selling resistance, yes, it does work at certain situations. Not every day, not every time. Okay. You have to know when The talent is knowing when to buy support and when to sell resistance. These zones that we have, they are what we call reference points or ranges, and what it identifies for us is a decision making point. And that is part, I mean, if you look here, remember we trade here mathematical, guys. We are professional. Hold on a second. No, we don't use market profile. Market profile is actually one of the best things, Benito, one of the best things out there that actually has any sense is market profile. And I thank you for bringing it up. It is, again, it's the same philosophy. It is the same philosophy. What we do is if I take off, hold on, I want to show you something. If I do this, guys, and I ask any of you, make a trading decision. At 160.40, who wants to buy and who wants to sell? Probably I'm going to have 50, 60 guys. Everybody has a different opinion, and rightfully so. But if you want to be a trader that is consistent and is able to make money in the market and can see the amount of money that could be made, you have to approach the market in a statistical method, in a statistical way. You have to approach the market by defining ways that makes you money more times than it does not. And you work on statistics. So with that, if I put the lines on and we decide, let's say, forget what they're made of for now, but if I say if the prices are above the yellow line, I want you to buy it, or if it's below the yellow line, you want to sell it. If you count now, and the same thing with the blue lines and the same thing with the magenta, just it's color codes, but they are zones for us to make a decision. Above it you want to buy, below it you're going to sell. And I want you to count. Number one, I want you to know how easy. Now see how difficult it was for us to buy or sell at 160.40. But right now, if it gets above this blue line, I'm going to buy. If it gets below this 160.20, I'm going to sell. That is now, and if you count how many times you buy, you made money. You buy, you made money. You sell, you made money. You sell, you made money. You buy, you made money. You sell, you made money. Sometimes you choose not to. And that's what you want. You want something that makes your decision easy. So right here, guys, if it gets below 160.20, we're going to go short. If it gets above 160.60, we're going to go long. And look at this. There you go. That is your decision. Above it, you're going to buy. Below it, you're going to sell. And there you go. You take the trades and you see how. And that's what trading is all about. Exactly. Thank you, Deborah. That's exactly what it is. And that's why you place your stop based on the rules. You decide to buy based on the rules. You decide to sell based on the rules. In the class, Kamala will tell you how we do these lines. I mean, everything that we do in the course. Remember, guys, in the course, there is, I mean, Deborah will tell you, and everybody that has taken the course, there is no secrets in trading. We explain everything to you. Because having something that you do not understand and know it in your heart what it does, you cannot make a trading decision. We explain everything for you. We give you the clarity, you understand what it does, and we take every single situation. We never teach a course on PowerPoint presentation. We give you the PowerPoint presentation. Thank you, Deborah. We give you the PowerPoint so that you remember what the course is all about, what is the material. But every single item is shown on you on the charts live every day, exactly like this Sunday session. We're doing it live, trade by trade, so that you identify it, and you're sitting in front of your computer screen in the classroom. You have a screen like this. We give you this platform, we give you the software, and you sit on it and you try and you make those decisions. It's a skill. We train you on that skill. So anybody that comes in and takes the course, we will sit him in the classroom, we'll get his computer, he brings his laptop, we put this software on his laptop, we put our software on his laptop, we hook him with a data feed, and then we explain to you what this line is and what this line is, and when you see this, here you buy, when you see this, here you sell, and you identify these price points and you take them. And you see now your decision is how easy it is to make a decision where to buy and where to sell. Now, having said that, not all signals are created equal. So we have to create a hierarchy of the importance of each signal. And that hierarchy again is part of the training. You combine, this is a puzzle. It's like a jigsaw puzzle, and if I take this lines out, it becomes extremely confusing. You cannot decipher this puzzle. You cannot understand the puzzle, because the chart and the market is not a logical thing. It is not something that you can learn from a book. It doesn't fit with our everyday way of doing things. In our lives, in our businesses, 1 + 1 is equal 2. You do a business, whatever, but it's not in the market. You see this going up, and then suddenly you want to buy, and then this thing comes down. So you have to adjust yourself in doing things in a different way. So in order to decipher this jigsaw puzzle, we have created a set of rules, and we put these rules, because it's visual, we have put these rules in what we call these lines. And the key lines that you see right there is our dictionary, if you will, of how to decipher and read the chart. And suddenly I want you to look here, take a mental picture over here, just take a mental picture of this area over here, and it's, as you see, it's so easy. It seems like a no-brainer that we want to buy it over here. Now if I take these lines out, where will I buy? Should I buy it, go up? I mean, if I do this, it becomes extremely difficult to decide if you want to buy or you want to sell. But once I just turn on these lines, and it's not magic, it's a way to understand things, okay? It's a way to interpret. It's everything is, as I said, is explained. Your decision making right there, it becomes everybody here, everybody that is watching now knows that this is where we have to buy, and this is how we take it to the upside. And that is the essence of we do in the Sunday session. We identify these points for you, and since you're not in the course and you don't know how to identify them by yourself, and as again we just only have 2 hours on Saturday, we just, what we do is we come here and we have what we call this radar screen. This radar screen is a part of the software, and what it does, it is an important component, because we need to know what are we going to buy and what are we going to sell. You cannot say I only trade the euro pound, or I only trade the CAD, or I only trade the euro dollar. Okay? When you say that, you're not trading. You are familiar with something, but that's not trading. You want to be trading something that is moving, because that movement is what's going to pay you. Okay? I need something that's moving from point A to point B. That movement is what's going to pay me. So right here, the radar screen, we identify the long point. This means I'm going to buy if the prices go above 92.80, let's say. And once it gets above 92.80, the color changes green. So now you know immediately that the dollar Swiss now is a buy above 92.80. You don't need to write a business plan that it goes out on pages and pages and pages. Now you know you want to buy the dollar Swiss above 98. You want to short it if it trades below, I'll tell you, and if it goes below 92.23, you want to go short. The structural point, the structural long, is a reversal point. It is a magnificent point. It is a very strong point. It is a real decision-making point that you really want to really buy. So in this, if I have a choice between buying above a long point or buying above a structural long, I will buy the structural point. Why? Because it's a higher hierarchy. It's a stronger buy signal. If I'm going to sell, shall I sell at a short point, or should I take a short below the structure point? I will take the short below the structure point. Why? It's a stronger move to the downside. Now, how far, the other question that Anthony is asking, how far should I go? Well, it's a no-brainer, Anthony. Let's look at this here. If my buying point is, my long point is 92.80, and my structural point is the next level up, the serious decision point up is the 93, that is the magnet. This is where they're targeting. This is, the 93 is like the magnet that's pulling the price from the 92.80. That is the magnet that's pulling it up. So that is how, at the minimum, this is how far it's going to go. And if it gets to the 93, it should explode. Now, we come back to the question that I think David was asking, that he has a lot of gyration at the 93, which is absolutely true, because it's a structural point, it's a significant point. But if you buy it, David, at the 92.80, which is the long point, and you know that the magnet is pulling it up to the 93, then you already have 20 or 30 points or even 50 points of a cushion that you can withstand the volatility at the 93. This is a practical way of trading. This is practical trading. This is not theory. Okay, that's practical stuff. You understand what you're doing. And if now it makes sense, you buy at the long point, you look at the structure, that is the magnet. So if you wait until it gets to the structure, either it flies, then you're going to say, I missed it, and now you end up not making money. Or if you wait there is a lot of gyration, oh, I got stopped out. You have to buy it at the long point and wait until it gets to the structure point. And then it gets to the structure point and it bounces its head 6 or 7 times, who cares? You have a push. Absolutely, you can do whatever you want. Okay, so Now we need as traders 5 components, 5 elements. In order to become a successful trader, you need 5 elements. Some of you heard me say this before, and I'm going to say it again and again and again, and I will never stop saying it, because this is the truth. You want to become a successful trader, you need 5 things. You need to have a specific set of rules. I'm not saying our rules, any rules that you want, as long as you understand them. As long as you can write them down. Rule number 1, rule number 2, rule number 3. You have to know these rules inside out, in your heart. And you are so persistent, you become obstinate at following these rules. Then you become consistent. And you can always sharpen your skill. You become skillful because you're following a set of rules. You become skillful. And you become consistent. Everybody tells you, when they're trying to tell you, I'm going to teach you how to trade, the most important thing, guys, you have to be consistent. And I listen to these guys talking and doing their sales pitch. And, oh, you want to buy my this, and the key is you want to be consistent. Okay. How can I be consistent? Teach me how to be consistent. He'll tell you, if the moving average crosses above this, and if the stochastic comes up and I'm looking at positive divergence, are you kidding me? These are stuff that is open for interpretation. They are subjective. Or my Elliott wave is going to fifth, third wave, and XYZ and B plus, and you can put, I'm serious, Carlos, you can bring a chart and you get 500 Elliottician guys, and they look at the chart, you will get 500 different opinions. How can you make a living on this? But let me ask you a question now about being consistent. Let me ask you a question about being consistent. 158, here is the rule. If it trades below 158.30, if it trades below 158.30, you go short. If it gets above it, you close your trade. Every time it does that, you go short. That's consistency, my friend. Even though you might take a small loss, who cares? But when it moves, that's the move. That's you be consistent because you have a rule. A rule that's as simple as a line. Above 160.58, I am buying or I'm doing nothing. Below 160.58, I am selling or I'm doing nothing. This is how you become consistent. It's clear, cut, no ambiguity, no if, buts, whatever. That's it. Okay? That's consistency. The second thing you need, guys, is what we call portfolio selection. That is the most important thing you need, following the rules. The second thing, portfolio selection. I need to know, if I put another radar screen here, which is whatever, if I get, for example, one of the classic, whatever, anything, it doesn't matter, let's say, I'm just opening a chart for you. And then we're going to come this Monday, and we're going to decide, I want to buy. Look at this. How can you make a decision based on this? What's this? In heaven's name, they're taking people for a ride. How can you make money of this? What the hell is that? I kid you not. I mean, how can you make... Anyway, if you look at this here, And this is basically your classic radar screen or classic quote page, and you see all of that. Okay, what are you going to buy? Shall I buy the euro or the Aussie or the pound yen, or what shall I buy? Is it red? That means I'm going to sell it. Is it green? Means I'm going to buy it. How can I make a decision? So people tend to do what they love best. I like the dollar Swiss. I'm going to trade the dollar Swiss. I like the dollar CAD. But that's not trading. What trading is you need something like this, which is portfolio selection. And what is portfolio selection? Is this. Now that is my dollar Swiss. It gets above 92.80. Now I'm going to buy. And what's happening in the market now, it is reversing. But now I can see which is the strong currency to buy. This is the big move. The Aussie is moving 126 pip. That is their delta. It is pretty much near the low of the day. It was short, strong reversal. This means it was going up. It changed its mind and it's coming down. So behind every single one of those, what the software is doing is we have the chart in the background. So if you look at here, it says short, strong reversal, the pound Aussie. This is exactly as if behind every single symbol there is a chart, and the software is reading every single one of them to tell us what is happening in that market. So now short means I want to sell the euro Aussie, the pound Aussie, and it was reversal. It was going up, it changed its mind, it's coming down, and it's a strong reversal. So if I click on it like this, you would see that it was originally going up, and then it has changed its mind, and you'll see the reversal. As soon as there is the move, went going above the market. It went above what we call the zone right there. As soon as it poke up, became that's a buy signal. As soon as it reversed, now it is a short and a sell signal. Now you take it and you maximize it is the weakest, and you stay with the trade until the end. And it's not just with one currency, it gives you the same story with all these pairs, and we identify these pairs every morning in the trading room. Okay, I will do that for you. And we identify, this is what we call our portfolio selection. We put all our charts together and we see which one is weaker than the other, and we take them and we take the trade. Now, once you identify your portfolio, guys, what are you going to buy and what are you going to sell, you need number 3. And the third thing is to get into the trade at the best possible time. Because when you get into the trade, as soon as the signal is triggered, you are getting in at the best possible time, and your stop is going to be small. Okay? Now, and this is what the software does. Again, because that's part of it. We choose the trades, and then we turn the software to actually tell us when the signal is happening, and we also can see that on the radar screen. Now, David, let me ask you a question, or Carlos. If you bought something at 160, let's say you bought it over here, and it went up to from 160.50, it went up to 160, to 161.50 pips. How much money did you make? All of you guys, I'm not going to put anybody on the line. How much money did you guys make? If you buy it at 150, 160.50, and it goes up till here, and you're still in the trade, how much money did you make? Well, not really, Phil. Not really, not really, Benito. Not really, Deborah. Barbara. What you have made exactly, Femi. You made nothing. Zero. Until you sell it. Until you take your profit. They see these are all my guys here, Femi and all these guys. They know. Well, potentially doesn't pay the rent, Phil. What we want is something that pays the mortgage. So we want to get in at the right time. That's only half the equation. And we want to get out at the right time. And that is number 4. And you need to have diversity. So you need to choose between many, and you need to get from the exit from the trade at the best possible time. What we have for the exit, Benito, is this. We have identified what we call the best statistical. What we do is the best statistical entry and the best statistical, forget my spelling, exit. They are not the perfect entry and they are not the perfect exit. They are the ones that work most of the time. And that's what we need. Perfect only works for yesterday. Statistical works for tomorrow and the day after and the day after. If I get you a perfect entry, it will work up till yesterday. If I get you a perfect exit, this is only as of yesterday, but it will not work as of tomorrow. A best statistical entry is going to work for tomorrow and the day after and forever, because you always can adjust that to get the best statistical entry and the statistical. And these all best we have identified based upon the chart structure and price behavior, and you would see that it will get you in. So look at this. This is the actual trade. I'll show you, Benito. 1 second, guys. This is the trade. This is the trade, Benito. This is the actual trade that I took. I'm going to turn that off. Okay. So now this is the actual trade in the account. I'm turning it off. Now I'm going to put the strategy. And I want you to compare them both and see when is the best exit and where is the best entry. And you would see that the entries, and wait until it comes up, and that best statistical entry and the best statistical exit is what, it's just downloading the data, is what's going to give you the consistency and the ability to capture the big moves. Now the last but not least is the thing that you need, is the continuous community, the continuous team effort, the continuous hand holding. You need some people that follow your same set of rules, they follow the same set of methodology to remind you. Look at this. This is what these are the, every blue is a winning trade. So the system took 4 trades. One of them was a small loser, and then took 3, one after the other, winning trades. So you will take the trade and then you let the strategy run to tell you when is the best possible trade. Because now, if you would have taken this trade based on the strategy, let's say that we did, let's take this trade for example. I did it on Friday. I took about 110 pips on that trade. So you went short over here. Yes. If you take this trade, everything is recorded. You take the trade over here. Now you move up. You decided to take profit. And people will be scared to take the trade the next time. But now it goes the trend resumes to the downside, now the software says, Benito, you have to go in again, you have to go short again, the market is going down, the condition is selling. So now it shows you minus, so you take it again and you stay. So instead of missing all this move, now you take a second trade and you capture that move. Instead of sitting, oh, I should have, would have, could have, now you're in it, because now we're giving you the best entry and the best exit. And then the third trade. Well, yeah, you have to learn how to use that, because having the program is not, it doesn't work. Okay? Exactly. Absolutely. And in the long term here, it does the same thing on a bigger scale. Okay? So anyway, and that's what we do, guys, it's not your problem, David. You have to be shown how it's done. That's the way it is. You have to, and this is what all the guys that are here with us in the room, most of them are in the room with us. I do that with the guys in the room every single day. I come into the room, the trading room, at 7:30 every morning, and I stay there till about 9:30, and we trade the first 2 hours of the London session every day. And it's not simulator, I trade live money. If you see the account over here, this is live money. I don't use any simulator, I don't use any pretend money. If I like the trade, I will take it, and the guys in the room also take the trades, and this is how they learn. And this is how you are shown how it's done, by seeing it done in front of you. I'm not taking those trades to impress the guys in the room or to impress upon you that I made no, because I win and I lose. But the one thing that I impress upon everybody is that I do the same thing over and over again. That's why at the end of the day, we're consistent and we're making money. Okay? And that's the 5 components. Rules to get it, to know what to do, to be consistent. Choose what you want to do and to do it right. Once you take the course, you're automatically in the room, Kamal. Because everybody is in the room is trading live. This room is not open to the public. I could have opened this room to the public and made a ton of money on it. Okay? But that's not the intent. The intent of this room is to train our traders on how to make money. So they come in, and I trade the New York session. Yes, I do both of them. So if you take the course and you come into the room, you know exactly what is the yellow line is. You're not going to ask me what is this yellow line and what is this dashed line, whatever. But when you're in the course, you're taught this stuff, and you're now in the room, you're trading live money. So I have to pay attention to you. That's why I always ask the guys, who has a position, who's long what, who's short what. I am keeping an eye, exactly what I used to do on the trading desk. I keep an eye on all my traders, because if somebody is in a bad position, I have to get him out of the trade. I'm not going to explain that, you can use that, and basically, so we can use it on multi-charts, and you can hook it up to any broker. I think Janet and Mike can answer these questions for you. Anyway, guys, it's 5 o'clock. I had a long day. So anyway, I hope you enjoyed it. That's basically how to use it. Take these numbers and buy and sell. And it is basically, it's less expensive for you guys, and it's much more efficient. All right. Anyway, guys, thank you very much, and I'll see you on Monday morning in the room at 7:30, guys. God bless.